Jade Capital Partners midweek report. Hi there, my name is Rob Clayton. Well, kicking off with the Australian dollar. The markets had a bit of a shake-up after the bears got rattled around that 76.0515 level overnight, and the market progressed further and took out the 76.60 level. At the moment, market's trading in a 76.45.90 band, and any advances towards 77 figure 50 should find good supply there. We've had numerous attempts above this region and has failed. And while this pattern holds, then I expect to see eventually the market turn away from this region and look back down towards 76.0515, which is where the trigger level is. And you can see here, if we can get underneath that level there, around 76 cents, then that would give further emphasis to the downside and look back towards 75.45 and maybe lower, but reassess from 75.45. In light of the recent strength or demand in the last 24 hours, if we get a break above 77.5, then that would give further scope up towards an objective around 78.50 and reassess from there. But at this stage, I don't have that call, so we need to see in the next few days how this level plays out at 77 figure 50. The euro looks challenging at the moment for further demand, with the market looking up towards the resistance of 112.9505. Above there, resistance is even firmer, which is where we got the rejection of 113.6065. In light of the slow uptake, considering how weak the US dollar has been, and also noting that the dollar index, that the euro is made up of 57.5, is the fact that we may actually see this upside fail. And if we do, then we're looking back towards the support of 112.10. And beneath there, which you can see here, was where I was holding before, around 111.4550. If we get a break of either 111.45 or above 113.60, then a firmer direction comes out. I'm in the bear camp still, so I expect to see this region fail, and I'm looking back towards eventually, after the market settles from the overnight weakness of the US dollar, of 110.5 and down to 109.50, which is still that awaited target that I've been calling for a while now. But if we get a break above that 113.60 level, then that will give scope up towards 114.2060. But as I say, I'm still holding the bearish view at this stage and expect to see this region fail. The dollar yen story, quite disappointing really, considering after reaching a high on Friday of 104.31, it's collapsed. Now taking out the support of 102.35 does give further scope to the downside, but at the moment holding at 101.25. If we get a move under 101.25, then that would give further scope towards the recent lows that holds around 99.4060. So at the moment, in the next 24 hours, if we get a break of 101.25, then yes, I'm looking for a further down move. In view of what's happened over the last 3 days, and especially how this indicator is actually performing, is the fact that we may see the downside eventually come through. It is very, very disappointing that the market didn't actually progress on towards 106. So I'll be looking for a stronger yen in the next few days and maybe see that level challenged around 99.4060. Well, sterling, different case to euro, and actually rallies on and breaks through that 133.60 level and records or prints a 7-week high, now challenging the regions that were stabbed before around 134, should I say 135, 34, 30, 40 to 136, 50, 80. Now towards this region, it'd be interesting to see if the market can sustain. We've been on an upward trek since 128.5, and that pullback to 130.25 and then higher. So while maintaining above 133.60, does look for a further move to the upside, but would need to break through 134.50 60 to get that move up to 135 to 136. So keep a note of 134.5. However, the longer we maintain under 134.50 60, then we could see a break of 133.60 down towards 132 to 132.10 15. It's very hard to try and determine on what the market's doing, because the break levels is no continuation. And only in the last few days the market has shown a better trend than it has done over the last few weeks. So what's in favour is the fact that the market has got another 150 points upside, and will hold that view unless 133.60 negates that break, upside move from the break. The gold story, well, from what I put out at the beginning of the week, is that the rejection of that bullish or pivotal point at 1,300 got the move up, and the breaks of 13.16 and then 13.28 looks towards this congestion area, which is around 13.52 to 56. Now moving over 58 would give further scope up towards the recent challenge levels around 66 to 72. At this stage, I can't rule out further challenges to the upside, and the market might be a little bit short, so we may see some short covering in the next 24 hours. And as I say, currently trading around 51, 51.5. Here's the fact that we go through 52, then we move on to 56.8, and possibly, as I say, up towards that 64 to 72 region. Support now comes in at 13.45, but firmer at 1,338. Crude, well, the story there a little puzzling really. But we got a recovery from $43 a barrel, stabbed up towards that region of 46.25.50, and then back down again, and now pretty much directionless at the moment. I still believe that market towards a 46.25.50 challenge will fail. However, support now comes in around $43 as well, so we're pretty locked in that band at the moment until we get a better, firmer direction. A break over 46.50 would look up towards the recent highs around 48, but I feel now that we may see a base coming in now around $43 a barrel. Finishing off with the stock market, well, the SPY, very erratic price action. Now we did see a test towards the resistance of 34 today, and respects that level. Currently trading slightly on a bid tone at the moment, may see another test towards that region, but the indicator isn't that strong, so I feel that any advance is still selling to strength towards that 34 level, and expect to see a pullback to about 96 or down towards that 53.65 support. If we get a break above 34, then it will give further scope up towards 54.78.82, but I'm not seeing that call at the moment. And the S&P still pretty much driving in a non-direction and holding in a 21.71 to 21.86 band. I still feel the market unlikely to make any renewed highs around 21.92.93, and with the risk factor is eventually seeing it pull back towards the downside. But technically there is a slight bias to the upside, but I'm not overly confident that the market will sustain. Well, that wraps it up for the week. Thank you very much for your attention, and look out for the report that will be dropped on the website on Monday. Have a great week ahead.